Okay, well, everybody get signed on here. We appreciate you guys being here. My name is Carl White, and I'm with the Marketing Animals, and we have a panel that's going to help us out today on talking about HARP. I was on the fan page the other day and did a little posting about HARP, and we had a lot of people commenting on it. And boy, we saw a lot of, looked like a lot of confusion about what you could do and what you couldn't do. And we just want to make sure that everybody has the right information. And I think, in my opinion, and we'll be talking with the 5 panelists here, I think this is going to be one of the biggest opportunities, or it is one of the biggest opportunities I think I've ever seen. And it just solves, we all know that anytime we can go solve somebody's problem, that's a very good thing. Number one, it's a nice thing to do. And number two, we get paid when we solve problems. And this is a huge problem, certainly some states more than others. But for us down in Florida, this is just, gangbusters. It's going to be really, really big. So I think learning how to use this and maximize this so that you can help more people, make more money, and keep you from stubbing your toe and, get into a situation where, maybe, I don't know, kind of an embarrassing situation. So what we're going to be talking about is HARP, and we posted some questions on the fan page, and you guys sent in what questions you wanted to ask. So we put together a team on answering that for you. So we have with us today on the line Emily Provost. So how you doing, Emily?
I'm doing great. Good afternoon, Carl. My name is Emily Provost, and I'm with Capital One Home Loans, and I'm really happy to be here this afternoon.
And you're in Austin, I see. Awesome, awesome Austin.
I agree. It's a beautiful day here in Austin.
Yes, thanks for being here. Brian, good to have you here, brother.
I'm Brian with Mortgage Atlanta in Atlanta, Georgia, and I'm glad to be here. I want to say thank you for putting this on and helping educate our industry on a really great mortgage program.
Well, yep, and I appreciate you being part of it. We have Mike Mullen.
Hello, Carl. Thanks for having me on. This is fantastic. And again, it's Mike Mullen. I've been affiliated with First Priority Financial since 1999. Great group out of Northern California. I'm up in Spokane, Washington now, and the lovely lady over my right shoulder is my wife, Rebecca, and she's got the title processor, but she does all the hard work in the office.
Good to have you here. Yeah, First Priority's excellent company. We have a dear friend of mine, Jim Sanger. How you doing, Jim?
Doing great, Carl. Thank you very much for having me today.
Good to have you here, brother. I really appreciate you being here. And another friend of mine just down the road, Chris Brown.
Hey, Carl, to be here. As you know, always love to return the favors that Marketing Animals have done for me personally, and I'm glad to be here.
All right, real good. Well, I appreciate that, guys. All right, well, let's jump right into this. So, first thing, I got a little disclosure here. First of all, we're not attorneys, but we did stay at the Holiday Inn Express last night. So no, so we're not attorneys here. We're just we're a group of 6 people. Just we did a little bit of research, answering the questions to the best of our knowledge. All the answers are correct, but we would refer you to go to Fannie Mae's site, Freddie Mac's site, do your own due diligence, just to confirm everything. But we went over this before the call and went through all the questions and heard each person's answers and did a little research if there was any disagreements. But again, we're just doing this just to be some nice girls, nice guys, and anyway, so that's my little disclosure. Emily, let's let you take this first slide, and let's talk just real briefly. What exactly is HARP, and what's the major difference between the current HARP program, and we understand there's a HARP 2.0 which is coming out in March. So what is it, and what's the confusion between the two different types, Emily?
Sure, those are great questions. First of all, what HARP is it stands for Homeowner Affordability Refinance Program. And what these are is they are Fannie Mae and Freddie Mac loan programs that allow people to refinance through expanded criteria that might have trouble qualifying during today's tough credit standards, and also with negative equity in their home due to declining home markets. The major difference between the two is HARP 1, the programs will remain somewhat the same as far as their structure is concerned. Fannie Mae has a Refi Plus, which is a manual underwrite, and also a DU Refi Plus, which is through DU, which is automated underwriting. Freddie Mac has the Relief Refinance, which one of them is the same servicer, which is a manual underwrite, and then also open access, which is run through LP, their AUS. The biggest difference between the two programs is they are removing the LTV ceiling that has been in place for the past 2 years under this program, which was currently 125%. So they're going to remove that entirely. So there's no maximum LTV anymore, and there's also no maximum CLTV with this program. They're also removing the bankruptcy and foreclosure requirements, and basically just trying to allow more homeowners to have the opportunity to take part of this program, because what they did when they enrolled it in 2009 is they were anticipating anywhere from 5 to 6 million would actually be able to benefit through this program, and in reality, only just short of 900,000 did as of the end of last year. So it's made to allow more people to have access to our historically low interest rates that we have today.
All right. So the basic synopsis of it is it's primarily for people that are upside down in their house to refinance. Mm-hmm. Up until now to March, it's capped off at 125% LTV, but after March, when the 2.0 comes out, there will be no LTV. So you could be, like here in Florida, me and Chris are seeing easily houses at 300,000 are only worth about 150 now. That's what this addresses. Am I understanding that correctly?
That's correct, but there is one facet of it that's supposed to be available right now for HARP 2.0, and that has to do with the manual underwrite portion. Really, the only people that are going to be able to see that and take advantage of that are any loan officers out there who may work for any of the larger banks. Most correspondent lenders and brokers don't have the ability to do the manual underwrite portion because they're not servicing their own loans. So that's when the manual underwrite does come into play, which is apparently available now, though I'm not seeing that on my end with any of my contacts that I have in the big banks. So the majority of the industry will be able to take advantage of HARP 2.0 come March, correct?
All right, very good. All right, so what we're going to do here for the next probably 30 minutes or so is we're going to go over some questions, and each of our panelists is going to take one of the slides. And we're going to talk about what about the borrower, what about the loan, what about the lenders, what about the program, other questions that kind of didn't fall into those two. And then at the end, which is going to be my favorite part, is what about the marketing? Like how are these people marketing them? So everybody on today's call is loan officers, and they're actually doing these. And so how are they marketing them? So that's real good. So Emily, while we got you on the line here, let's go ahead and let you take the first one. What about the borrower? And we'll just kind of take one question at a time here. Is there going to be any income requirements on this, Emily?
That's really not a black and white answer. If you look at the actual posted guidelines that are available on eFannieMae.com, Fannie Mae has not posted any specific income requirements unless the payment on the principal and interest is going to increase greater than 20% on what they're paying right now. As far as any actual income documentation that Fannie Mae is requiring, they're not posting anything that they're going to look for in particular. However, the biggest part of this that comes into play is when you're dealing with each individual lender and investor. Everybody has the ability to place their own credit overlays on top of this program. So anyone who is looking to take part and put their customers and their borrowers through any of the HARP programs really need to pay attention to the exact lender that they're going to be using and make sure that they're checking into their credit overlays to make sure that their borrowers are going to qualify. So there's really no blanket answer for that. The biggest thing that I can advise as far as income requirements is check your guidelines for who you're going to be putting the loan through, because that's really the end all of it. And part of the reason Fannie didn't do that was what they wanted to do, especially with some of the larger banks that do service their portfolios, is they wanted the banks to have the discretions on if they thought that they should go forward with that homeowner affordability refinance or possibly look into a modification for them.
Got it. Give them the option. What about are there going to be debt-to-income requirements?
And that kind of falls under the income question as well. Some lenders do put their own overlays as far as DTI is concerned. Again, Fannie Mae has not posted anything as a hard, fast rule except for when the payment is increasing by 20%. And the rule of thumb there is they need to be at or under 45% debt to income if they're going to be increasing their payment by 20%. If somebody's in the 30-year and they're going to take advantage of these great 15-year rates we have, if their payment does increase beyond that 20% threshold, they do have to adhere to a 45% DTI.
Now, what if there was only one spouse on the original loan? Can the new spouse, I guess, can they be added on to this loan?
That's a great question. They absolutely can, but they do need to qualify under the same guidelines that the original borrower and the original spouse would be qualified under as well. So if you're running AUS on it, you've got to pull a joint credit and make sure that they're both being run through. But you can absolutely add another spouse to qualify if you need to.
Now, does the same answer, is that the same answer if it was on two spouses, and let's say there's been a divorce or separation, and now they want to do it with just one spouse. Is that the same kind of answer?
Yes and no. They do allow for you to remove someone. I can tell you from very personal experience, having trying to do this for several of my customers, it is a very difficult process to prove, because what basically, if you run it through DU literally bounces back with a condition that says we see somebody is being removed from this original mortgage. What you have to do is you have to show evidence that the remaining borrower has made the mortgage payment from their own funds for the last 12 months. And literally, this cannot be a joint account with anybody else on it. And like I said, this is from very personal experience. It can be done, but it's tough to prove. You basically would have to have that one spouse with a single account with no one else having direct deposits going into it, showing 12 months evidence that that mortgage payment has been made by them solely, and then you can actually remove the borrower.
All right. What about other hardships other than negative equity? Is there any other requirements that they're, like you must have some sort of a hardship of some sort? Do you have to do a hardship letter or anything like that?
No, in fact, hardship actually really doesn't apply so much for the refinance portion of it, except for in terms of negative equity. They do, most of my experience that I've had with it, be it with the manual underwrites and also with AUS, is we still have to show that they're capable of paying their bills. And in fact, the program requires that we show that they're current on their mortgage and that they have no more than 1 times 30 in the past 12 months. HARP 2.0 is going to no 1 times 30 in the past 6 months, but it will allow for a 1 times 30 months 7 to 12. So it is actually important when looking at someone who may qualify for the homeowner affordability refinance program that make sure that they are current on their mortgage and that they have paid their mortgage on time. The other thing that allows for, aside from looking at any kind of negative equity situations, is it's also looking at anybody who might have higher debt-to-income ratios. I've been very successful with looking at people who are self-employed who maybe got run through and qualified for a loan back in 06 or 05 when DU was basically waiving all income docs. Now we have to actually show those, and be it whatever circumstance it might be, and DU will allow for higher debt-to-income ratios on the HARP programs than it will for a standard conventional loan right now.
Okay. And what are the credit score requirements? What have you seen on that?
And this kind of bounces back to the answers involved in 1 and 2, which basically means that Fannie has not come out and said that there is any particular credit score minimum, except for unless the payment increases by 20%. So if the payment increases by 20%, per Fannie Mae guidelines, they are looking for a 620 FICO. If you're just taking someone who's in a 30-year right now and reducing their payment and seeing monthly savings, per Fannie, there's no credit score requirements. However, this is when I would, say go back again to your guidelines on the investor that you're looking to put this through, because every individual investor has their own unique overlays on this product. Some of them will say, we'll run with you. If you approve it at a 550 credit score, we'll take it. Some of them will impose a minimum 620, which I've seen to be pretty much the norm out there.
Okay. And how about the verification of assets or reserves? I heard that some of it was stated assets, or are they having to do the bank statements and things like that?
With that, I have a lot of experience with one bank that I used to work for, where I did a lot of the manual underwrite portion. Again, most of the industry's probably not going to be seeing the manual underwrite because that has to do with same servicers. But even in that facet of the program, even though they said it was stated, we did, if they were required to bring funds to close, we did have to show those bank statements. Most of the mortgage professionals are going to be dealing with the automated underwriting portions of these programs, and what it means is that whatever DU or LP is asking you to verify, that's what you're going to need to verify. So you kind of revert back to DU and always revert back to your guidelines for the answer on that.
Okay, real good. Well, Emily, I mean, you're obviously a wealth of knowledge with this, so I really look forward to hearing how you're marketing this. Because evidently, you're obviously closing some of these. So I really look forward to hearing how you market this, and we'll do that here toward the end. So let's transition over where we talk about the loan itself, and my dear friend Brian Berman from Atlanta. So Brian, let's talk about the loan a little bit. You can just kind of take the questions at the top here and just kind of go down. Is there a max LTV?
Well, for the most part, Carl, there's not going to be a max LTV. If you're doing a 30-year, a 15-year, or a 20-year fixed-rate mortgage, there's going to be no cap. You'll be able to do a 200% loan-to-value if you wanted to. Where there are going to be caps are on kind of your, unique products like ARMs or the 40-year fixed mortgage. Fannie Mae and Freddie Mac have put a 105% LTV cap on that program. Again, there's not going to be a combined loan-to-value cap on that, just an LTV cap for ARMs and fixed-rate mortgages. The products that I've seen available for this one are the 30-year, the 20-year, and the 15-year. I've seen a couple ARMs, and I haven't seen a 40-year, and I know that there's not any interest only.
Okay. And you know, I've heard a lot of talk about the appraisal, and really these next two questions kind of go together. Is will there be an appraisal, and how will the value be determined?
Well, this is kind of an interesting question. It depends on where you live. I've read a couple things on certain states require appraisals on all transactions, regardless of whether Fannie Mae or Freddie Mac give you the waiver. The second part of that is whether Fannie Mae and Freddie Mac give you the waiver and the product that you're getting on. For example, Freddie Mac uses what's called HVE, which is their computer generation for like an AVM. And if your AVM is within their guidelines, then you won't need an appraisal. But if their AVM comes back and your loan to value is 70%, you may not be eligible for this program. Most lenders have a minimum loan to value of 80%. For example, if you have something that's below that, you'd have to go back to the old D Refinance Plus or the Open Access or the old HARP guidelines. For Fannie Mae, they have what's called appraisal waivers, and I've been told that they're going to be updating this system to actually give a value on there, but I couldn't confirm that with anyone from Fannie Mae. I've been told that by a couple of different lenders that they're expecting Fannie Mae to actually give a value similar to Freddie Mac, because this goes into play with those people who are below the 80% and they don't want to be able to utilize this program. And if you get the waiver, there's not going to be any appraisal requirements. Most of the time, they do charge a $75 appraisal waiver fee, which could come into play on your good faith estimates. Most people go, oh, if no appraisal, we're not going to put the appraisal fee on the GFE, and that waiver fee needs to be shown on the good faith estimate up front. So that's kind of how value will be determined and where will there be appraisals.
Now, what about a second mortgage? How does that fall into place here? If somebody's, say, if the house is worth 150 and they owe 150 on the first and 100 on the second, how does that work with a second?
This is going to be very similar to kind of the way FHA looks at it. There's not going to be a cap on combined loan to value. You can't combine your second mortgage into the first mortgage or anything like that. It's strictly a rate and term refinance. One of the things you're going to have to do is you're going to have to subordinate the second mortgage. This was a real challenge when HARP first came out. A lot of the second mortgage lenders were not letting you refinance, or they were requiring an appraisal when Fannie Mae wasn't requiring an appraisal, and then we had to comply with HVCC, which got really difficult. But now pretty much everyone's on the same page as far as refinancing a first mortgage under HARP and having a second mortgage. I've done a number of these the past 6 months, and what most of the second mortgage lenders or the home equity line lenders are looking for is a copy of the findings from Fannie Mae saying that there's no appraisal required, and if you have that, then they should be able to subordinate the second.
Okay, and so I guess that kind of falls into, and I'm going to kind of skip down to the bottom here because a similar question looks like, so can a HELOC or a construction loan be rolled into one loan?
No, you're not going to be able to do that on this product. If you've got something like that, you probably want to subordinate it.
Okay. And what if there's PMI? How does that fall into place?
Now, this is one of the major changes that I've seen the mortgage insurance companies come through with. When HARP first started, most of the mortgage insurance companies prohibited you from changing servicers. Under the new HARP guidelines, most of the mortgage insurance companies have what's called a refi to mod guideline, which tells you specifically what you need to do to change servicers and refinance under HARP 2. I was on 4 mortgage insurance companies' websites the past couple of days reading up their guidelines. It looks pretty simple, it looks pretty straightforward, and it looks like they have the ability to do it quickly, which is what I think that I was kind of nervous about. If you have a third party that you don't have control over, like the lender, trying to get this refinance to mod through the mortgage insurance, it could take 45 days, I don't know, but it looks like they have a system in place to make it happen pretty quick.
Okay. And LPMI?
This was a challenge that was in place under HARP 1. You weren't able to refinance if you had LPMI under HARP 1. Under HARP 2, you will be able to refinance if you have LPMI. The way that's going to work is if your original LPMI had 30% coverage, you're going to have to do what's called the refi to mod at the mortgage insurance company and get borrower-paid mortgage insurance at the same level, at the 30% level. And the way that you're going to have to look and see that is you're going to have to go and run the loan through DU or LP, and you're going to have to see who the mortgage insurance company is in your findings, get the certificate number, and go read their guidelines on what the requirements are for their refi to mod on LPMI. I know that 4 of the places that I checked all had guidelines specifically for that, and there is, in some cases, a fee that the mortgage insurance company is going to charge in order to do that modification. So again, that's something that's going to need to be on your GFE. So before you send out your disclosures, you need to go and run your loan through DU or LP and find out if that mortgage insurance company charges a fee.
Okay, very good. And for everybody feverishly taking notes here, I should have said this up front, that we're going to provide a recording for this at the end. I'll give you a website that you can go to and get a recording. We're actually going to ship the recording out to you as a CD, so you can listen to it back and forth to work and things like that. So, Brian, can the occupancy type change? Like if it's a non-owner occupied or second home or primary residence, can that change with the refinance?
Yes, there's going to be no restrictions on the occupancy type. When you look at the loan level price adjustments for the Refinance Plus or any of the HARP programs, there's really just 1 or 2 adjustments, and there's going to be a cap on that, and there's no adjustment for changing in the property status type or for investor or anything like that.
That's very good news. And then last question before we go to Mike is what if the property's for sale? How does that work?
Sure. This was an interesting question because I wasn't sure the answer to this, and I found a frequently asked question, or actually Chris pointed out this frequently asked question on Fannie Mae's website. If you go to their FAQs, number 14, it says that Fannie Mae is going to waive any restrictions on if the house is currently listed for sale. Under the current program, most lenders will make you take the house off the market, take the application, and then do the refinance. Under this program, it looks like Fannie Mae is waiving that requirement. I don't know whether lenders will have any overlays on that, but according to Fannie Mae, they're going to let you do that.
All right, very good. All right, well, a lot of information about the loan, and Brian, I know you're doing extremely well up in Atlanta. I got a picture of that new BMW you're driving around in, so things are good for Brian. So I just like with Emily, I really look forward to hearing how you're marketing this, and we'll discuss that here at the end. What about the lenders? So Mike Mullen up there in Spokane. Why don't we do a little bit on the lenders here? Mike, we'll just go from top to bottom here. Is this allowed with any servicer?
Sure. Thanks, Carl. So far, yes. I mean, the program is open to all servicers and lenders that are selling to Fannie Mae and Freddie Mac. And the good news from the stuff I'm reading, though, is that it definitely looks like HARP 2.0 has kind of leveled the playing field and made it much easier for those of us that are not working for the current servicer to be able to move borrowers from one lender to the other. But yeah, the program's open to all servicers that are selling to Fannie and Freddie.
Is there, so I guess it kind of answers question number 2, is there a single lender prepared to underwrite and close these loans?
Yeah, well, this is interesting, too, and I feel like it may be one of the toughest topics on this whole program. I was on a call yesterday with a group of colleagues across the country yesterday, and we're all trying to compare notes on who's doing these, and not one person could come up with one lender that was offering the actual full range of all the benefits of HARP 2. So as of right now, I'm not aware of anybody who is offering every single benefit that HARP 2.0 is offering. However, I am assuming that the big banks, the seller servicers, will be, within the next couple of weeks, rolling out the manual process that Emily was talking about, and will be making the unlimited LTV available to their current clients. I had one gentleman suggest that possibly Wells Fargo was going to be rolling theirs out for applications dated February 6th or after. But again, this is all sort of changing by the day. We're getting memos from investors and from wholesale lenders. The other thing I would mention on the wholesale side, Carl, is that, I mean, other than the unlimited feature, there are numerous wholesale lenders out there and correspondents that are doing the HARP 2.0 with some of the other benefits, like the capped fees and some of the credit enhancements and income enhancements. So there's still plenty of money available out there to be able to get these loans done. But we are going to have to wait till the end of March for the AUS systems to be updated to be able to do the unlimited LTV.
All right, and when you say there's no single lender that's providing everything that HARP 2 is going to avail, is that because, and that kind of goes to the next question here, about the different lender overlays, and what about these lender overlays?
Sure. Well, I think the overlays are just something that originators are going to have to learn to live with. I mean, they've been around for a while, and I understand that we all have a desire to help our clients, and if we see a loan product that solves the problem, then we all want to have access to it. But sometimes it's just not going to be possible. If you're working for a firm that seems to be limiting your ability to get the loans closed because of overlays, you may just need to explore working for somebody who can broker out those loans.
All right. And what about banks that just say no?
Yeah, well, this is interesting too, and I'd like to answer it along with the next one, which is, are lenders being forced to use these new guidelines? This is not a government mandate. This is a product that is offered by Fannie and Freddie, and lenders can either choose to use the product and offer them to the consumers, or they can choose not to. So there are going to be some lenders who are going to say no, and there are going to be some lenders who are going to continue to put overlays on them.
Okay. And a final question for you, Mike, before we go to our dear friend Jim, is do you have to use the original servicer?
Yeah, most definitely not. I know that's been confusing. It has been mentioned earlier that one of the major roadblocks to HARP 1 was the inability to move clients from one lender to another that had PMI on their transaction, and it appears as though that roadblock has been removed. So this is definitely not limited to same servicer.
Okay. Which I appreciate that. That's some excellent information about the program, and again, looking forward to see how you and your team over there at Priority Financial, top-rate company, looking forward to seeing how you guys are marketing here in just a few minutes when we talk about that part. For now, let's jump down to my dear friend Jim Sanger. And Jim, I've been a fan of yours way back when you first came out with the U magazine with Loan Toolbox. I've always been a huge fan, so it's an absolute honor to have you here, and would like to hear your feedback about the program.
Carl, thanks a lot. I really appreciate that. It's and likewise, I've been a big fan of yours since we met that first time out in Las Vegas.
Yeah. Well, you weren't supposed to bring up that trip, Jim. We agreed that what happened in Las Vegas stays there. So.
I just won't release the details. But.
Okay, that sounds good. Well, Jim, what about the program? When will LP and DU be updated to accommodate this product?
Well, from what we've seen from the agencies, they're going to release the updates in mid-March. I know we got one release from Fannie Mae, which indicated that it's going to be updated the weekend of March the 17th. And while I haven't seen anything specifically from Freddie Mac, everything that we have seen, it indicates that it's going to be a similar time frame.
Okay. And so when they do this, is there like an end to it, like it was with the $8,000 tax credit?
Well, there is a scheduled end to the update, and that's going to be the end of 2013. So, for anybody that wants to take advantage of this, obviously the greatest and best time is now, because we don't know where interest rates are going to be the middle of March, much less the middle of 2013. So, it's going to be really important for us to make sure that we're reaching out to everybody that we can. Just as you had indicated from the very beginning, the reason that we're here is to help people. And the reason that we want to make sure that we're doing all that we can for everyone else is to make sure that those that can qualify and are eligible have the ability to today.
Right. And Jim, I know you always operate with a sharp pencil, and certainly would never be one to gouge anybody. But just for completeness here, is there going to be a cap on the origination fees on this?
There's not specifically a cap that's listed on origination fees that come down from the agencies, but on an investor-by-investor basis, you do have a max amount that you can collect on a correspondent level. Of course, if you're in a broker environment, you're going to be held to whatever agreement you currently have. But I do know in some cases where if people are looking to do no closing cost loans by increasing rate, there may be some flexibility on an investor-by-investor basis, or within an individual correspondent.
All right. And how about the big banks? Are they going to have it? And I know we have some on the call that are with the big banks. Are those guys going to have it before the third-party originators will?
I think some of them are going to have the ability to do some in advance. I don't know that it's going to be significantly in advance. One of the people that I talked to yesterday had they currently work with a big box lender, and they're going to have access to many of the features in February as opposed to March. But for the most part, if you're doing a servicer-to-servicer type of refinance, they've already had the ability to do that. And as far as releasing it to TPOs, I think the majority of us, there are some that allow us to go up to 125 today, and other than that, we're pretty much going to be held to waiting till the middle of March, which for the most part, when you look at it right now, that's not that far away.
Right.
So it's more a matter of just making sure that we're setting everything up in advance to do the best that we can when it is released.
All right. And gosh, this might be a question that brings up more cat fur than anything else. But is there a specific reason why HARP 2 was allowed for the Big Four in December, but everyone else has to wait until March? Is there a specific reason behind that?
Yeah, there was a lot of talk, and I guess depending upon what side of the fence that you sit on, you can be upset about the service-to-servicer models. But for the most part, it wasn't just released to the Big Four. Anybody that has a portfolio of loans had the ability to start doing the servicer-to-servicer models in December. But there's so much opportunity that's on the table. I think for anybody to really get upset about it, you're just taking your eye off on the ball. I mean, focus on what you can do as opposed to what you can't, because it's going to represent a lot of opportunity for you, and you're going to do a lot of good for the communities that you work in.
Yeah, I couldn't agree with you more on keeping your eye on the ball. I see so many people waste so much time talking about how come this and how come that. It's like, look, here's the rules, play by them and win. So
exactly.
That's why you're the powerhouse down in South Florida. So Jim, how long are these taking to close? Is it kind of the typical, or any shorter, later? What are you seeing?
Right now it's going to be a typical close. I think what you're going to have to look at, though, is as everything gets ramped up and released towards the middle of March, you're going to have reasonable expectations that you set with your borrowers as to how quickly you can get these things closed. So on deals that you're getting done right now, you're looking at typical time frames on what we're going to be looking at, the middle of March. I think with just the probability of increased volume, you're probably going to be looking at 45 to 60-day close times in some cases. It's not going to be with everyone, but I think if you carry those expectations and close it earlier, then you're going to be seen as a hero as opposed to a goat.
Yeah.
And the other part is, so many of the other big box lenders or whomever, they're not getting deals done that quickly right now.
Right.
So if you're not working there, I think this is just going to prove to be another opportunity for you. That if you can't get them done quicker, promote it, make people aware of it, and take advantage of it.
Yeah, I like that. Well, Jim, again, you're a powerhouse down in South Florida, very well known for your production. So, looking forward to hearing about how you're marketing this too here in just a few minutes. So, let's go to my dear friend across the street here, Chris Brown in Orlando. So, Chris, again, thanks for being here, and let's go into kind of the things that kind of maybe fell into two different categories and whatnot. So, we gave you we're giving you the hardball.
I get the spillover. All the smart people got to handle the main ones. You got it?
Yeah, this is what was left. So it's great to have you here, brother. So, so tell us what exactly is the 2009 date, and on your research, have you seen, are they going to be changing, eliminating, or extending that 2009 cutoff date?
Well, they did. That's a great question. They did change it from earlier in 2009 to a cutoff of June 1st, 2009, meaning it had to have been May 31st, actually. But I have not seen or heard anything that they would be changing that date, that the loan had to be backed by Fannie or Freddie by that time. And while it's kind of cool to think about it, let me ask you this. Would it matter? Because if you look at the track record of the rates since mid-2009, the argument could be made that rates people have gotten since then, it would kind of make a refinance debatable anyway, because if you look from June 2009 to November 2009, was that steady decline from 5.5 to 5, and ever since November of 2009, we've been at or below 5% anyway. So the majority of the people that are going to need to benefit from this program bought their home before that point anyway. So like you and Jim were talking about earlier, focus on what you can do. You can always find something to gripe about, and my father always called those folks SNIOPs, and not becomes susceptible to the negative influences of other people. Go out there and kill what you can do.
It's very powerful. Well, what about, is there any seasoning requirement if somebody's gone through a bankruptcy or foreclosure?
This is a great question. I actually had one come up where they were still in their Chapter 13. So unfortunately, that one's not going to work. But I got some content here from the Seller's Guide, dated November 15th, but the 2011-12 Seller's Guide on eFannie Mae, that they are removing the bankruptcy and foreclosure policy and the requirement to meet the standard waiting period, Carl. In fact, they're waiving the requirement for the original loan to have met those same timelines. So this could be great for folks that are coming out of those type of things, but they meet the other requirements.
Very good. So I mean, this thing really sounds, I mean, which is why we did this call. This sounds like just a really impressive thing, a good opportunity for everybody, you know, for the borrower, for the people providing the funds and helping people out with this. And I look at this and I go, geez, you know, with the LTV, I can be 100% upside down here and still get a refinance. And most of the stuff we've been asking here, at least on the guideline, it looks like a pretty promising thing. Is this thing do you see it as it's as good as it sounds, or like is this giving false hope? You know, like the media just pumping it up here with elections coming around. Is this is this the real deal, or is it smoke and mirrors?
Carl, you're singing my song here in Florida, man, because he's more jaded than I am of all these programs that have come out, you know, promising to be the savior of the housing market, only to just fall flat because there was that one monkey wrench or something else in there that just kind of ruined it for 98% of the people, and no more than in the states of California, Arizona, Nevada, and Florida. So you're certainly singing my song there. So, but I've been waiting for that other shoe to drop, where I could just cynically throw this up to all those other programs that have come out. But you know what? I haven't seen it yet. So I'm cautiously optimistic to the point where until I see it, I'm going all out sharing this with people, because now is the time to get ahead of the curve. If you're waiting till March to get all the answers before you're doing anything, I'm entirely cool with that if you're in Florida. If you're not in Florida, you need to be going out after this now.
Yeah, that's why they call you Mr. Implementer. So, so I like that. What about jumbo loans? Is this going to work for jumbo loans?
In short, no. By definition, a jumbo loan is not backed by Fannie or Freddie, so it doesn't even pass the first litmus test. Now, you are in some of those areas where you've got jumbo conforming mortgages or high balance loans. You may qualify for the DU Refi Plus and the Refi Plus. In fact, if you go look at question 37, and Brian helped me track this down, that's one of the things I love about the marketing animals. Carl, just a quick aside, is the info sheet and the knowledge database that exists in the membership. But you know, question 37 of the HARP frequently asked questions addresses this directly, so you can read it a little deep yourself. But if it's a jumbo non-conforming, no. If it falls under the jumbo conforming mortgages, yes.
All right, very good. And I guess I think we kind of already answered the last one here. What if someone isn't Fannie or Freddie? Are they SOL, which by the way stands for sorry, out of luck?
Yeah. Well, I actually love this question, and it leads into the marketing segment, which I think we're going to address here in a minute. But I could hug the person that asked this question because there are other options for folks. It's not just Fannie and Freddie. I mean, look at, you know, FHA Streamline's an option. But just importantly, if they can't do a HARP refinance and they're upside from their homes, what an opportunity to endorse your partners so that you can help bring realtors short sale opportunities. Gosh, there's no better way to build a relationship with a new partner or to reward your current partners that send you business than bringing them short sale opportunities, is there not?
Yeah, no doubt. No doubt. That's a great angle to be taken with this, Chris. So there's other solutions. Take the blinders off. That's brilliant.
Yeah, and one thing I want to point out and share just with you guys, and unfortunately Jim's in Florida, but I'm not telling anybody else in Florida about this, but a lot of people are saying if you're not current, you can't get HARP. I would debate that point, because HARP is good through December 2013. So they could be late today. If they are current for the next 11 months and they qualify with all the other components, they are a HARP lead, and they can do a HARP refinance 11 months from now. So look beyond the obvious on families that you can help.
Very good. That's a great points, Chris, no doubt, and it's easy to see why you do so well, and you kind of own the Orlando market. So appreciate you doing that. All right, well, let's transition and talk about marketing here at the end, because I'm going to tell you guys, I mean, for me and everybody, it's no secret, this is what I focus on, is the marketing part. You can be giving away $100 bills and have the best deal in town, but if nobody knows about it, you're in an empty room. So you have to let people know that you're able to help them, help solve their problems, because so many think this isn't going to work, it's not for, I can't do it, you know, there's no need to even call anybody because we're hopeless, and this is going to be like the other stuff that tried to help. When, like Chris says, it seems like it's not. It seems like the real deal. So marketing is a huge point that you want to focus in on this. So let's talk about that, and we're going to talk about how do we get the word out, who would make a good referral partner, can an assist make the initial call to the database, or should I make those myself? Can I use social marketing? Do I wait until March or act now? So this is just kind of some suggested things. But Emily, let's take you first. Emily, how are you marketing this, and what's giving you the best results?
Well, I'm actually marketing this pretty much any way that I can, quite frankly. You know, I did very well with this program. I kind of stumbled on it in very early 2010. What I did was I'm originally from the Northeast, and the Northeast has been hit just like Florida pretty bad with property values. So, I mean, I know the areas back there, and I actually, when I was working for a seller servicer, really attacked the Northeast with a passion, and there was just so many people up there who were just crying for help, who'd paid their mortgage on time at 7%, 6.5%, and, you know, this was like a savior to them. So, you know, like you said, anytime we can help people and get paid for doing it, I mean, that's just a win-win. So, you know, you can target it just to all your past clients, and I would just, you know, kind of no holds barred do it. That's anybody that I meet and I talk to, be it even, you know, outside of the workplace, I'm always letting people know about this program because so few homeowners do. And there's a lot of people out there who just assume they can't refinance because the credit standards are so much tougher these days and property values have declined. So a big portion of who I work with is referral partners, which is real estate agents and title agents. If they've had listings that they've had to pull from the market, that's a great way for them to be able to help their clients as well and really be able to say, you know, hey, listen, we weren't able to get the home sold, but I've got the solution for you that's going to help you out financially right now because, again, there's no season as far as having the property on the market. So that's a great outlet. Title agents are also another great outlet. You'd be surprised, you know, title agents, especially here in Austin, are just great sources of information as far as databases and being able to target certain communities to do a lot of marketing too. So, you know, you can do this. I've done this with direct mailing, with literally picking up the phone and calling people, you know, really any way I can get out the word I can. And then also another thing that I'm working on right now that I'm pretty passionate about is putting together a homeowner information night. And I'm working with title agents and insurance agents to start putting this together. And what I'm trying to do in my community is really kind of set myself apart as the HARP expert here. And, you know, because I do have the ability to work and to do a D-Refi Plus, for example, for any servicer, you know, that really puts us in unique positions because that is the nature of these changes that HARP's coming out with, is they do want to level the playing field, and they do want to be able to have people have a choice and not say, oh, geez, I was with, you know, Bank of America, I'm forced to go back with Bank of America. So, you know, it really is a matter of getting the word out. And I think, you know, being able to come together with other local area, you know, experts, title agents, insurance agents, real estate agents, and being able to show that to your community is just really powerful. So that's something I'm pretty excited about that I'm working on as we speak.
Very good. Well, I'd sure like to hear, what time doesn't permit today, but I'd love to hear more about how you're setting these classes up to teach. So perhaps we can ethically bribe you to come on again and talk more about that, because that sounds very interesting to me.
I'd be happy to, Carl.
All right. I appreciate you, Emily. Thanks again for being here.
Thank you.
Next would be Brian Berman. Brian, you're a powerhouse up in Atlanta, so tell us how you're maximizing this to help more people, thus putting you at the closing table more often, Brian.
Well, I'm doing this in a couple ways. As soon as I found out that the HARP 2 program was coming out, I took my old HARP strategy and kind of revamped it. The first thing I did was I took Chris's advice, and Chris told me for the longest time I needed to have an assistant to handle some of the day-to-day tasks that I wasn't the best at. And I hired an assistant, and she's been calling my past clients. And I gave her a list of 80 of my past clients. I didn't, want to overwhelm her and give her a huge list, but I just gave her 80 clients. And she set up 20 appointments this past Monday and 20 appointments for next Monday for me to make phone calls. And I thought that was a little much for one day, so we actually had to go back and spread those out a little bit. But 60 out of 80 people were interested in talking with me about past clients about refinancing. I thought that was amazing. I thought I was probably going to get 15. And I thought that was just a huge number there, and I'm really excited about that. And I sat down with a number of them on Monday, and I took 3 full applications, locked-in loans, just from the stuff on Monday, and many more coming.
Wow.
So, and that's using some of the new HARP 2 programs already, like the loan level price adjustments that have already taken place with some lenders. With the real estate agents, I have 2 real estate agents I approached on different sides of the city of Atlanta to market to their past database. I said, let's send an email and a mailer to all of your past clients, and let's use your marketing and say, hey, let's do a free evaluation to find out whether you can refinance. And the reason why she was interested in doing that, the real estate agents, were if they weren't Fannie Mae or Freddie Mac, and they were upside down, to do exactly what Chris talked about, maybe look at a short sale. If you're upside down $200,000 on a house, does it make sense to keep paying your mortgage? That's something that the real estate agent can talk to them about, and that's a potential sale for them on a short sale.
Yes.
The other thing I talked with was an insurance agent. I had to give the insurance agent a little bit of incentive. So for the people that didn't qualify, or people who bought in 2010 that wanted to refinance that couldn't qualify under HARP programs, what I did was I set up a way for me to kind of a 5th page of the mortgage application, and I asked them, what are their insurance rates, are they happy with their CPA, and those types of questions.
Yes.
And I was able to say, okay, if you, Mr. Insurance Agent, are marketing your database about refinancing, you give me those leads, and if I have people that I can't refinance, well, I'm going to pass them off to you to see if you can save them money on insurance. And that was fantastic. That was a huge marketing push right there. And then posting on Facebook. I made a post this morning, and I already have 2 people in my voicemail that I know that said they were going to call me about HARP. And that was just fantastic. These are people that I hadn't talked to in years, that I went to high school with, and they saw my post, and both of them wanted to refinance. Thought that was pretty cool. And I want to talk to Carl more about developing a good Facebook ad strategy to maybe market to my clients as well. I know you're the master of Facebook advertising.
I appreciate that. All right, well, real cool. Well, it's I'll be happy to talk to you that here off the call because of time permitting. So, Brian, the basic thing I heard from you, honestly, was just good old blocking and tackling, so to speak, and write small checks to cash big checks. And it never ceases to amaze me on how people, don't look at small, write small checks to cash big ones. So absolutely brilliant, my friend, and it's easy to see why you're such a powerhouse up there. So really appreciate your insight today. Good stuff. I love that idea of your assistant sitting down and making those calls, and it's working. So very, very smartly done. Thanks for sharing, brother.
That was the scariest thing I did in my business, was hiring an assistant. And I took yours and Chris's advice, and it paid off. Very
good. Yeah, Chris is certainly a cool guy to hang around with and get good stuff. So thanks again, Brian. Appreciate you being here. And let's switch over to Mike Mullen. So Mike, how's the marketing? What are you doing? Some of the same things, different things than the other 2 just mentioned already?
Well, it sounds like I'm doing a couple different things, and I'm trying to stay very focused so that I can maximize my efforts into it, Carl. And but the first item, the mortgage column, is actually nicely leveraging something I've already done for the last 3 years, which is that I'm in a small community outside Spokane. And about 3 years ago, the owner of the community paper said, "Hey, Mike, would you mind writing a regular column for us?" And so I've been doing that for about 3 years. I've kept it very newsy and not salesy. And when HARP came along, I just started dropping in HARP updates. And so that's been pretty effective here locally. And then I am going to be working on a HARP-specific webpage. because I do believe that there's going to be a lot of business to be garnered out there on the web, and so I'm very interested in putting together a niche web page for the HARP program, and actually in the middle of getting that completed and launched right now.
All right, very good. And it has here also a personal Facebook post and things of that. So are you doing some of this on Facebook?
Yeah, like Brian mentioned, I've got a pretty good sphere of influence now. Unfortunately, a lot of my friends are in California instead of Washington, which is where there's a much bigger problem. And I've also got quite a few real estate agents on my personal Facebook. So I am on an every couple of days basis trying to post in there someone that we've helped with a HARP loan and reduce payments, and that is getting attention as well.
Very cool. I wonder, what I'll do is, again, we're going to make this recording available for everybody. We'll put in, but I just got a great idea, Mike, from what you're doing. I love that you're doing the personal Facebook post, and I wonder if, if we were to go to grab that Q&A that Fannie Mae produces that has all these facts and figures about HARP, and frankly, this recording, all you guys have had some great information, and just grab one little snippet a day and post that little snippet. Is that the kind of things that you're doing?
Well, I had not done that, but that's an awesome idea, Carl.
Very cool. All right, so we'll get a copy of that Q&A and make sure we include it in with everybody that gets the recording. So, and then the developing a blog, is this the individual website that you're talking about HARP? Correct.
Right. I've got an existing website that, again, I have posted HARP-related issues to, but I really want to try a HARP niche-only site and see how that performs.
Yes. One quick question on your writing the local newspaper. We've had a couple people do that in the past, and just always everybody says it just gives them such good mojo, a lot of energy off of it. Would you agree that it's a whole lot easier to do that than what virtually everybody thinks that it is, or is it indeed a challenge?
It can be a challenge if it's weekly, like mine is. In fact, all the other columnists have dropped out over the last 2 years. I've been the only one who's managed to maintain. So there is an every Friday at noon deadline, and you got to be there, but you're probably used to that. And but I found it well worth it. I was new to the community, and it built great credibility.
Yeah. And you had your contact information on that, so you're getting just a massive. I mean, can you imagine having to buy that column in that newspaper? My guess is every week that'd be very expensive.
Well, that was the beauty. I had like a $50 a month ad running. I was about ready to cancel it, and the owner said, "Hey, if I included this column, would you keep your $50 a month ad?" Sure.
I'm going to steal that story. I like that. That's too funny. All right. Well, I appreciate that.
I'm sorry, I was just going to add, the great part is all the people who I don't even know who will now come up and introduce themselves, because I also have my photo on the column. So that's been a real winner.
And how could you not recognize that handsome mug at the restaurant or in the grocery store? So.
Well, remember, it's Rebecca over my shoulder.
I see. Well. Very good. Well, Mike, thanks a lot. I appreciate your insight. So now let's go next to Jim. And Jim, you've always been a powerhouse down there in southern Florida, and certainly you guys, just like me and Chris, are seeing just a huge need for this program. How are you marketing this?
I'm not doing anything, Carl.
Go on to the next one.
I mean, if we just stopped everything up to this point, there's more than enough ideas for people to keep their pipeline full from now to the end of 2013. But there's been just some great ideas, a lot of which we've discussed with several people up to this point, and I've been doing some things as well. But I think there's a number of things that we need to look at and really try to focus on, what can you do in the biggest bang for your buck. There's obviously, we're going after a database. I met with somebody yesterday, and I'm doing a $390,000 on their primary, and we're lined up to do another $300,000 on a second home, just from contacting your database and having conversations with people. And it doesn't even have to be driven towards, can I help you out, as much as it is, hey, I'm just calling to see how things are and what we can do to help you out, and if you have any questions about what's going on. And from that, opportunities will certainly come to you every day. But I think one of the bigger things that you can look to do is, what can you do from a web presence? Because as we started this call out, one of the questions or one of the statements that you made was, there's a wealth of hunger for information about this program. that exist not only within those that have the ability to originate loans, but also those that are going to have the ability or want to get these types of loans. So the more that you can do to differentiate yourself and set yourself apart on the web, the better off you're going to be. Other things that you want to do as you're targeting business opportunities, I mean, take a look at the communities that were built back in 05, 06, and 07, because within that, particularly in areas where property values started to decline right out of the gate after people bought, it really doesn't matter where they were at. They were locked out of refinancing for the most part if they did an 80% or a 90% LTV deal. So a lot of people that I'm talking to that purchased in these communities back in that time frame, they're all sitting out there right now with rates in excess of 6%. In some cases, they're at rates of 6 and 7/8 or 7%. So as you start to lead towards them with information, it's going to provide you an opportunity to help people, because so many of these people, and keep in mind that 85% of the people in the troubled states like California and Florida that are upside down, that have Fannie and Freddie type loans, these people are current. So they haven't experienced the same type of distress that, you know, when people have asked, you know, do you need a hardship for this loan? They haven't experienced it. But the flip side is, they're also of the belief that there's no program out there that can help them, and they've become accustomed to making payments on higher than average and higher than market interest rates. So, you know, some of them may not believe you when you call them up and say, hey, you know, I can help you out. You know, and so, you know, just keep that in mind. As you're looking at different communities, you know, I've had agents that have suggested, hey, you know, we're going to look at doing door hangers. You know, if you can't reach out to them directly, you don't have their phone number, go up and do a door hanger. You know, pay some kids to go out and drop some things off. Another thing that we're looking at, you know, and I know Emily had discussed this, is doing seminars. You know, so we're starting now to have conversations with HOAs on what we can do in order to make their community aware of how their residents can benefit from this program. Because if you can get in front of a group of 10 or 15 or 20 people that are all significantly upside down, obviously you're going to increase your opportunity to take more applications in one shot. And, you know, the other thing, the last one here is, you know, dealing with affinity partners. Yeah, you know, if you open up any of the sites that are similar for insurance agents, like the Mortgage Marketing Animals here, one of the things that you'll see that I'm talking to their insurance agents is, what can you do to cross-sell additional product to help build your revenue? However, you know, a lot of us deal with this objection every day, and we're talking with people, you know, if you're faced with, are you going to go out and buy something or spend something else, you know, you just don't have the additional money or the funds in which to do so. So if I can help your insureds come up with an additional $500 a month in their pocket, do you think you could potentially help them turn it into an additional insurance product for them? I think the odds of getting a yes from the agent is probably pretty good. And one way that they're going to be able to do that is by helping them go through their database and find out who can benefit. So, you know, be very open to having these types of conversations. I was talking with an accountant today, accountant in Pennsylvania, who, as I'm having a conversation with him, he goes, you know, I've got a lot of clients right now that are purchasing homes in Florida. I said, well, do you have other clients that have homes in Florida? He goes, I've got a lot. I'm like, well, this could potentially help you benefit them, and whether they work with me or not, just make sure that you're helping to spread the word, and if you happen to want to give up my name, that's great. So, you know, don't hesitate to make sure that everyone is aware, because people are not.
Yeah. Well, that's great stuff, Jim. I mean, you know, it's easy to see why I'm a fan of yours. So let's go to my good friend, Chris Brown, Mr. Implementation. Chris, how and again, we're going to make a recording of this available to everybody. We're getting ready here in just a couple minutes here. I'll give you the website that you can go to. Before we do that, Chris, how are you marketing it here in the Orlando area where there's so many to touch?
Hang on. I'm taking notes from everything everybody else has said. Gosh, man, we are having a lot of fun with this, because it finally, in the state of Florida, we can walk out of our office and look in any direction, and everybody needs what we've.
Yeah.
I mean, it's literally like selling kids to a candy.
Yeah.
You know what I mean?
Yeah.
We do it different in Florida. No,
we do it different in Florida.
But I'm doing a couple things, and the first one that you have here is direct mail postcards to targeted neighborhoods. I love how Jim created additional clarity with that. I wrote that down for communities that were built in 05, 6, and 7. We have a ton of those here. So those are target rich. created a flyer, and I'm just going to pound through a few of these. We created a flyer, so when I'm having conversations about HARP, whether they qualify or not, there's a tip. Let's say they don't qualify for HARP. Say, hey, gosh, you probably know people at work that are upside down too. If I sent you just a little flyer, you think you could throw that up in the break room or something?
Yeah.
100% of the time, I've gotten a yes. I'm 99. 100% of the time, they've said yes. Now, I don't know if they'll do it. I don't care if they all do it, but if you don't ask, they're not gonna.
Yeah.
Video email. That's one of the things that I was able to learn a bit from you guys as the marketing animals, is communicating through video, because you can't deliver your enthusiasm, your mannerisms, your smile, and all of that via email. And you're limited doing it on the phone. But when people can see your face, there's so much more of a relationship and a bond that's built there. But I have not only sent video to my database talking about it, but I have sent videos for my partners that were outward facing for their clients. And I'll just give you a quick kind of script of what that goes like. Carl, let's say you were a realtor friend of mine. I'd say, hey, this is Chris Brown, and Carl and I were just talking about the incredible impact that the 2011 revisions on HARP might have. And Carl said, Chris, you have something that you've got put together that I can send out to the people that I care about so that I can give them this timely, accurate information. And so if you're getting this from Carl, reach out and give him a big hug, because he obviously thought enough of you to get this information, ...
Yeah.
A few more sentences, and boom. Now the partners don't have to do anything except forward, and now we're leveraging their databases and putting them into ours.
Yeah.
Don't limit yourself to your own database. Blogging, Facebook ads, you start looking at getting found online. I mean, you can have all the knowledge about HARP in the world. If people don't know it, you're going to do no business. Facebook ads, I learned from you, the pro, Carl, on those. I've had the opportunity to do some interviews on TV and radio, and that's just by being out in the right place. I'm the anchor for Fox 35 at Starbucks. I mean, it's not I put together. That just kind of happened. Splash pages. If you go to unbounce.com, it's one word, Unbounce, you can create your first splash page for free. There's no cost. Mike Mullen introduced that to me, I believe, and it's wicked easy to put together. But gosh, what a great tool. One, it end up subscribing. You can put more than one splash page. But that is a killer lead capture tool. Speaking of trade meetings, I've gone and joined the National Association of Insurance and Financial Advisors group here locally, and I'm going to be talking to them about HARP, because if we can help improve people's cash flow, that creates new money under management for those advisors potentially. And if we get people save anywhere from $400 to $800 a month, gosh, what we don't need is them going and buying wave runners and big screen TVs and all the stuff that kind of put us where we are now by the harvesting of equity. We want to make sure that we're doing our fiduciary responsibility by introducing them to people that can help them build wealth over time with those realized savings. And we're also looking at putting together co-sponsored seminars. Haven't done these yet. I'm interested in talking with Emily a bit after this about the homeowner information night, because we've got several people already on board that said, sign me up. I mean, you just have to go say the word HARP, and you're going to go get business. It is out there, and it is low-lying fruit, Carl.
Yeah, no doubt. All right, good stuff, Chris. And I love the way that you guys are connecting up and working with each other. I mean, I've always been a huge proponent of masterminding, and so what an awesome group of people we could put together here. So good stuff, guys. Well, I just wanted to thank all of you for your input into this. Again, everybody here donated their time, and I really appreciate it. We put a recording of this. We're going to record it, and we recorded it, and we're going to put it up at HARP Recording.com, HARPRecording.com. I think it's like $4.94. It's whatever handling and shipping is of the DVD. So it's like $5. And so for $5, you're going to get the recording of this. You're also going to get an online version. We're going to send you a copy of it in the mail so you can listen to it back and forth to work. We got some great marketing ideas we're going to include in with it. and you also get the transcription to this. We're going to send it over and have it transcribed so that you can get it out. And I'll tell you, it's some really good information. And we're also going to include in the Q&A from Fannie Mae. So just in order, again, that's at HARP Recording.com, and as more stuff comes up, we'll do this again here if we have some more questions coming up. So Brian, appreciate you being here, brother.
Thank you.
Mike, it's an honor. Great to have you here from Spokane.
Hey, thanks, Carl. I appreciate it.
Emily, you make the rest of us look good. You know, you help make the page. Other than Mike's lovely wife, you make the page worth looking at. So, so incredible information from you, and look forward to hearing some more good stuff from you.
Thank you very much, Carl. I'm very honored to be here.
Thank you, Jim. Always a pleasure, brother. Looking forward to hanging out and seeing you soon.
Thank you, Carl. I appreciate the time.
So, Chris, as always, it's a pleasure to spend some time with you, and you're always a wealth of information. And if nothing else, you always make it fun too. So I appreciate you, brother.
Well, thank you for that, and I'm proud to be your friend, Carl.
All right. All right, so again, that's HARP Recording.com. You get a recording of this. They mailed it out to you. We'll send you some additional marketing ideas, and you get the transcription of this. So thanks for hanging out with us for this last hour or so, and appreciate all of our panelists. And if you want to show them a little love, it'd be a personal favor to me if you go to the fan page the Mortgage Marketing Animals fan page and show them some love there. We'd sure appreciate it. So thanks again, and we'll see you on the web. Put this one in action, guys. This is huge. Don't sit on the outside and watch in. Be on the inside and take a ride up to the penthouse. So thanks again, and we'll see you on the web.